What's good, y'all? It is currently Sunday, and I'm just gonna go ahead and go over the trade that I took this week. It was a very choppy, I don't even want to say choppy. It was a very crazy market this week in terms of setups. There were definitely not a lot, but I think that there were definitely some opportunities that I missed, and it could have definitely been because of the current market conditions where I wasn't feeling as confident to take those trades. Hence why I only took one trade, and it was on Monday. But other than that, I'm gonna go ahead and go over that trade, see what I did very well, see what I could have improved on. Was my user execution on point, or was I more of skipping some steps? And we'll go ahead and do a little breakdown on that. Alrighty, so pulling up the trade. Took one L on this trade. We had pretty managed risk, I would like to say. We had managed to keep the live account within $300 of risk, and then trading the combines. I also was looking to not risk anything more than 0.6% of the account, which was like roughly around $1,000. But we did a good job. We did a good job of managing our risk and just staying really patient, right? I think that the outcome of this trade was one where it's inevitable, right? All outcomes for any trade that you take is inevitable. It's a matter of how well you executed your setup, your strategy, and how well you followed your exit plan. So just going over this, on the higher time frame, I was seeing that price was in this little range right here where we were obviously trading up, but after this huge impulse move right here, where we did approach these recent highs, price did pull back and started trading within this range of this move. And so for me, I was definitely feeling a rangy type of day where you want to take short setups near resistance points and long setups near support. So that was the original thesis going into the day. However, when the the trade opportunity that I took came up, I did not do that. I was trading near the highs, but the reason why I was okay with taking a trade like this was because on the lower time frame, we did see price close above out of this range on the 15 minute. As you can see, we did close above it, and we were creating very bullish structure around here. So I was anticipating price to look to continue higher, especially with this huge impulse move up on the lower time frame. And we were trading near in the lower half of this range. I felt pretty confident that if this area was holding, that price could potentially move up. Like I said, or like it has been mentioned before, trading is a game of probabilities. It's a matter of figuring out what are the green flags, red and yellow flags that should dictate whether it is a high quality, mid quality, or low quality setup. And for this one, I deemed it as quite mid quality, to be honest. And the reason why was because we were trading in a higher time frame area of interest where I was looking for potential sells. And yeah, I was also okay with taking longs just because of price acceptance on the lower time frame, looking to potentially continue higher. It did unfortunately hit my stop, and it was a very good lesson to be learned. But one thing, if there were good things that I could take away from this one trade, it was that one, I managed my risk. I did not look to over leverage or oversize my account to make any sort of gains. My mindset was very focused on just the process and having this be a new data point to my journal collection so that I can look to get better. And yeah. And then the second thing was that this. Yes, the trade did end up playing out. I did have my stop maybe one or two ticks too low, but at the end of the day, I did get stopped out. And the reason why these trades are deemed lower probability is because of the price of is because of where we're tr at what price we're trading at, right? So being in this area of interest would naturally lead to a lot of, I don't want to say confusion, but a lot of buyers and sellers getting stopped out. And that's exactly what happened to me. I got liquidated and price moved in my favor. I wasn't looking for any crazy target. I was just looking to target new highs, but just failed. And it is what it is, right? That's part of trading. So I'm glad that I took it because then that gives me some more skin in the game, some more experience, knowing that trade like this, although, on the higher time frame price does look like it wants to continue higher, we were respecting this level and we decided to move lower. And yeah, so that was the only trade I took this week. There wasn't anything special in the markets. I did miss a couple trades over throughout the week. And there was one gold short that I could have taken for a nice 1.3 R, but the reason why I didn't take it was due to the market conditions having FOMC on that day. So I was very hesitant and very risk adverse when it came to putting on any positions. And then there was another one where I missed the opportunity on NASDAQ, but that was just because my entry was one or two ticks away from, or price was one or two ticks away from my entry before taking off. And in those cases, you can't control the markets. You had your limit orders, you knew where you wanted to get in. You knew that setting your levels right there would be considered a great execution on your end. So I'm very glad that I didn't try to FOMO or chase any trades because that's usually what leads to a lot of little mess ups and mistakes, especially just taking a look at my journals back in February. I saw that there were a couple trades where the type 3 played out beautifully. If I had just been more patient and just allowed price to actually pull back into my limit order rather than just marketing in because I feel some sort of fear or greed of not seeing a high quality setup like this again. And those little psychological factors are some things that I definitely have been super aware of. And there's actually this audiobook that I'm listening to. It was recommended to me on Spotify. It's called Brain Hacks for Traders. And the reason why I've been enjoying this audiobook so much is that it actually breaks down a lot of the emotions that traders face. So the chapter that I'm on right now talks a lot about anchoring. So when let's say an example that they gave was, let's say if you're in a losing streak, right? You're going to have a lot more anchorage on the fact that you have been taking tr a lot of bad trades, or I don't want to say a lot of bad trades, but a lot of trades in a row that where you're not making money. So sometimes, well, the human mind will create the survival instinct and tell you that essentially the next trade that you take, you're going to feel more adamant on taking the one-to-one R rather than letting it play out fully, just because you feel this initial fear of not being right all the time. And just learning about all these little tips are so eye-opening and I feel as if this information is going to be extremely helpful for me to maintain a lot of self-awareness to be just more mentally sharp in the market. So that's extremely important. Your mental health is extremely important when it comes to trading, and it's definitely something where it's definitely something that I have been really working on and getting a lot better at. So I'm very proud of myself for that as well. And I also want to say that I'm about to hit my 1 year of actually trading this specific strategy. With me being in the markets for now almost 4 or 5 years, I wish I just stuck to a strategy, like just one single strategy. And uh, it sucks because it's advice that I've already gotten before. You hear it all the time. They say stick to one strategy, don't strategy hop, stick to it, learn it, fine tune it, and that's how you get profitable. And I was doing that where I would trade one strategy every 6 to 8 months, but because of my inability to adapt to the market conditions, it was very hard for me to actually maintain taking that strategy. And it was such a beginner mistake. And yes, I did journal. I was using TradeZello back then, but I think that because I didn't journal it in a way where I could just see all my data points all on one sheet, it made it really hard for me to believe that my system worked. And so I kept jumping strategy to strategy. I tracked my trades so many different ways until one day I came across Tom and found this template and saw how organized and how efficient it would be to journal to have a trading journal just like this, to be able to see what setups really work, what setups don't, to be able to measure out your win rate. And just all these data points have really helped me build conviction and confidence in my trading. And I also feel as if it's never ending, if that makes sense. You'll never feel like you made it in trading. There's always going to be things you want to improve on. So, although I have taken 100 trades and I feel confident with my setup, I still think there's a lot to learn because every single day markets are completely different. You won't see one setup that ever looks the same. It might look similar, but never the same. And I want to be able to stay on top of my market reactions when I see my setup play out and make sure I do whatever it takes to manage myself to not turn into to fall into that gambling mindset, if that makes sense. But yeah. Anyways, definitely a great trading week, great learning lessons. I'm looking forward to this new week and seeing how the market presents any opportunities for me, whether it's going to be exercising more patience to be more patient on my hands, to not force any setups. That can definitely be a possibility, but there's also opportunities in the market to take trades as well. So let's make sure that we are aware of both, but we're not too fixated on one or the other to make sure that we allow the markets to give us whatever opportunity. We take it from a third person perspective that the markets are just moving and we have no attachment to it. Main goal, no attachment, remain detached. Everything in life will come at you if you remain detached from any outcome. As long as you know that you focus on the process and you take care of yourself, things will be fine. But that being said, that's going to be the trade review for the week. It was a very short one, I know. Um, I'm not mad that I only took one trade, especially in June. June has been a slow month. I mean, had some trades here and there. Definitely took a lot more trades within the first week, but the second and third week a little bit slower, which is totally fine. But the main thing is not how much money you finish with, it's how well you've executed all of your trades. And every single one of my trades so far in June have been executed flawlessly. Maybe one or two minor mistakes when it comes to um maybe entries, like not entering at the 5 minute level or anything like that. But I will say that my my tracking of my data and my trades have been extremely process based, so I'm very content. Also, this one should be too. Sweet. So I have now taken 12 trades where so far that I've tracked where we have hit maximum execution. So at this point, I'm kind of rambling, but you guys get the point. I've been fucking on my game, executing my shit, and that's how it's supposed to be. But anyways, that's gonna be it. I will catch you guys next week for the next trade review. And, I'll even do just daily trade reviews if I take any trades, record a Zoom, give my thought process, reasoning, and yeah. But yeah, that'll be it. I will catch you guys later.